The old saying is, you've heard this and grown up with it, it's not timing the market, it's time in the market. And what happens is when we do analysis and we do studies and you miss just the best 7 days of the market throughout a year, it can significantly impact your portfolio and your return. And so getting out, many times people do at the bottom of the market, or when it's dropped significantly, maybe not even the bottom, they lock in those losses. And so I think that's interesting because right now, if you hear all of this, it's panic. Oh, this is going to be terrible. The data says that the year following, that's good. So if we're invested, if we're buying right now, and that in fact does happen, that has a very significant positive impact on our portfolio overall.
You know, and I've shared this with you before. My grandsons, I set up money for them when they turned 13. So they're now in their 20s, so that's been a while. But the point is, some of them were talking to me the other day, and I put them in income-producing stocks that paid good dividends because if you leave it alone until you're 50, 60 years old, you probably can retire on it. Well, they took me for my word. Well, when it went down the other day, I was saying, look at how cheap you're buying stock with those dividends. You're accumulating more stock shares.
Yeah.
So when it goes up, you're going to go up with more shares. We all like to see it go up, but if you don't have up and downs in the market, you don't have opportunity to make money.
That's exactly right. And oftentimes we tell people you have to look at the market as a mirror. Many times it's the opposite of what you see. When the stock market's up, we all love it. We're making money, but you're buying stocks at a more expensive price. And
Absolutely.
so Amazon is not $50 a share, it's $100 a share or whatever they're going for. So we need those downturns. We need to stay invested. We need to stay contributing to that because we're buying. And what happens over the life of your portfolio, these ups and downs, if you stay invested, you stay disciplined to do that, is that your average price per share that you bought is much better than the guy trying to get out, time it, and get in. And that's data. That's proven data. But it's hard to do that many times. And that's, the part where I've studied a little more extensively and really enjoyed on the behavioral side is fascinating because many times people believe themselves to be rational. We all do, right?
Absolutely.
I don't walk around and think, well, I'm irrational. I'm very rational. But my habits can often tell me different, and my behavior, if we track that according to finance, many times shows that people don't have that. They get nervous, they do the wrong things, and so people say, well, how do I avoid that? We teach and help people understand many times when we sit down with them the biases that we have. We all have these different biases. And so people say, all right, well, let me be aware of it, and then I won't do it anymore. Well, it doesn't work quite that easy. I wish it were, but what we do is we create disciplines. We know that we need to invest, stay invested. And those disciplines are what make the difference between somebody retiring with a very comfortable nest egg and enough retirement and somebody falling up short many times.
Well, there's no question that makes a difference.
I hope you enjoyed the broadcast today. I hope there are some things that can really help you to get investing or keep investing. That is our desire here. I wanted to make quick mention of helpmeinvest.com. helpmeinvest.com, an organization that we've put together. There's no fees. There's no products to sell you. It is literally designed to help you invest, to become a better investor. So you can go there, set up an appointment for 30 minutes. We'll spend some time with you. We'll go through your portfolio. We'll help you get started wherever you're at. helpmeinvest.com. I hope you'll take advantage of it. I hope that you will continue to send in your questions. They mean a lot to us because we can talk about a lot of things, but what we really want to do is find out what's important to you, the level of understanding, the questions that you have. So hopefully that we can add value to your investment knowledge and that you can increase and grow in that and stay curious and read as much as you can, get as much information. But when you have a question, please feel free to just send that in to us. Send those questions in because we really do enjoy them and answering them helps us to make sure that we're being relevant and pertinent to you.